Good morning, guys. Welcome to this Wednesday, March 25th. And we're getting close to the end of March, aren't we? I believe this is we have a couple of days in next week. And then we got April 1st, and then we got freaking Easter coming right around the corner. So right upon Easter. And right now it looks like we had a little pop late in the session yesterday. I believe it had to do with some some decent news out of the Middle East there. And so that was after they closed. A big pop happened there. I think it was that because there was some talk about the some breakthrough in some talks there. However, market hasn't really backed off that. They've been trading in that range, and they're actually to the upside. So it looks like there's some talks going on, and it could be a potential end of this conflict. That would be a good sign. Now, if it's going to come out and like everyone expects it and wants and so on and so forth, who knows, right? It's just a matter of getting that straight back online again, getting the objectives, settled or taken care of, and then and then the market is going to come roaring back, and the oil is going to come crashing down. So oil is already down at 87 this morning. So yeah, I think the market is pricing in that maybe there's an end in sight, that there's something bad beyond this. And I would just look at this, this popping up, taking a look at the news. The news this morning, mortgage apps came out to the downside, everything down on that sound like 10% down or so on the mortgage applications and refinances. We get import-export prices, current account, retail and wholesale inventories all coming out at 8:30. Oil report at 10:30, nothing at 10 as far as I can tell. Then we have a 5-year auction at 1. Right, so that's what we got coming out. Now, you remember the 2-year auction yesterday at 1 o'clock? We had some crazy stuff going on in the bond market. So definitely people are paying attention to the small and the shorter term bond auctions. But it looks like today we only have news at 8:30. At 10:30 we get the oil report, and then we have that 5-year auction at 1. Now looking at these two charts together, looks like we are holding above that 66.15s right now. We are halfway up in this range between the 67.15 and the 66.15s. And I would just say that we have an modestly optimistic chart at taking us back up and retesting the high. So I'm going to start off range bound, not necessarily with a bias to the downside. I think the late in the day stuff happening yesterday and the overnight holding those gains is a reasonably positive sign. So I'm starting flat out range bound, looking to sell strength, buy weakness fairly equally, and keeping an eye on these upper levels. If you're going to see the beginning of some sort of a rally, that would be good. It may be a little bit early for it still. For this to start rallying, and I think that they need a little bit more certainty in it. But if they come out and say that they have a deal, the Iranians do the same thing, the shooting stops and they stop targeting tankers, yeah, everything's going to kind of go. It's going to be a face-ripping rally at that point. So and then we have a structural change. After that, there is a structural change in the market when it comes to oil. It's not going to be that Middle East risk premium priced in anymore. Because that was always the case with the Iranians potentially keeping that straight, saber rattling or potentially closing that straight. So that's going to be going forward. So we have a pretty bright future going forward once this is settled. Now, looking at the levels, so looking for short setups against the 6680s, 95s, 6700s for rotations down. We're going to buy against support. 6660s, 45s, 35s for rotations back up. If they start taking out that 35, the session lows, I would be looking for more weakness. I would think that so 34 takes us down just to this upper level on this support area, a bigger one on the F1 here. So at that point, I would start looking for moves to the downside. And if they can take out this area, the 6700s, I would start thinking moving along, thinking alongside of the market, maybe getting some traction. But in this range, though, I'm going to look to sell strength 66.80s, 95s, 67.05s for rotations down, and looking to buy against the 66.60s, 45s, 35s for rotations up. Now, I always one level outside the obvious. If they run it down here to the 20s, could be still buying opportunity. I would still look to buy against these levels. It's just not as aggressively. So they start taking out the low session lows and start trading lower. I would look to the short side for direction. In other words, looking for lower prices. But I would still be looking if they get to these support areas at 66.15, the 66.05s, 95s, 65, 85. These support areas on the downside. I still be looking to buy against those, just not as aggressively, right? That's the key differential there. And on the way up here, they start taking out the high 67.05s. I would look for a move in one level outside the obvious, 67.15. It's going to be against this lower edge. If they have, if both of these comes out, actually 67.05 comes out, I'm going to start looking at the long side. Still looking for shorts against that 67.15, 67.30s, rotations down, just not as aggressively, right? So that's kind of how you go about it. Yesterday, the last 2 days, I haven't traded the ES and Nasdaq at all. I've been too crazy volatile, and that's always an option, you know. If you can't find the setups, if you're looking for a setup and you're trying to find an excuse for a trade, you're going to be losing money. Right? That is the pitfall we all fall in on a regular basis. Because if you're patient, step back and really try to figure out what the market is doing. Look at the levels, and when you get to level, look for your retest failure setups. Then you have a shot at getting on the right side of it with better odds. But I find myself, and I'm guilty of it as everyone else. Sometimes you sit there and you look for a trade. You think you get bored, or you try to talk yourself into a trade, or it's just you're just trying to find a trade. And if you're finding yourself there, if you're catching yourself looking for a trade like that, then you know that you're going to skirt the rules. But anyway, so that's how we go about the ES on the Nasdaq. Let's see how the Nasdaq looks. Capital flow on the Nasdaq also. Nice pop on the Nasdaq. They've been holding on to that gain as well. They're back up above that 360s. Not a little bit left to go to the 650s, but same dynamic there. Starting off flat out range bound. We're going to sell strength against the 540s, the 600s, 650s up to the 690s for rotations down. One level outside of that, 730s. But if they take out this area, the 650s, I believe is going to be the 650s, 650 up to the 690. The 650 and 690, both of them comes out. I'll change my takeoff. I'll start thinking long side of the market. Still looking for short on the way up here. I guess they start trading higher, but it's just a little bit less aggressively. On the way down, looking to buy weakness. Well, 490 is going to be pretty aggressive, but I would probably hold off for the 415s, 360s, 320s, and one level outside of that is 260s. Rotations up. Now, if they start taking out the 320s, I would start thinking short side of the market and see how far they want to take it. In other words, they start taking out this support area again on the F1, the big fat support area. That would be a lot more aggressive on the short side to see how far they want to take it. But it feels you got a little bit of a feel of a positivity in the air, given the news that came out late yesterday about potential talks going on and the overtures back and forth. So it's just hard to figure out who you're dealing with over there, I guess, after they've been doing this bombing. But you had to trust that they got enough intel there on the ground and going on that they can figure that out. So looking to sell strength against the 540s, the 600s, 650s, up to the 690s for rotations down. Above 690s, definitely start thinking long side of the market, but just not still look for short setups, but just not as aggressively. And on the way down, looking to buy weakness against the 390s, 360s, 315s. Onto that, 260s would be one level below the obvious. On the Nasdaq, I'm more aggressive on that one level outside the obvious because these guys just freaking run it like crazy back and forth. Always shoots more than you think, you know. So we had to be a little bit cautious about that. Then we'll see how this whole thing kind of developed throughout the day. Wow, look at that! We just had a big move right there. Go figure. So this is what makes it really difficult, right? You have sloppy trading and then you have big moves like this, right at 7:45. Another one big come out here right at 8:15. There's no real news to drive it. This is some kind of a headline or something happened. But look at how they just run it over from 66.77. They're down at say 55. They're like 20-point bar right now, and literally in a few seconds. So that's how fast the whole thing goes. So I have opted not to trade these ones very aggressively at all the last couple of days. That's trying to find really good opportunities, and you kind of had to stare at the screen a lot because it's flopping back and forth pretty aggressively. On the bond market, I had traded bond market a little bit more actively, and I had been a lot better setups there. But as you say, I mean, it had to be a little bit more patient on it. The bond market is to the upside, so they're back up here. Get cleared the 113s, they're back up, heading up towards the 114s. So we'll see if that strength's going to hold. Right now, I would look to buy against weakness, 13, 15, 16s. The 1308s down to that 113, the buck. So these three support areas. Below 113 even, I would be taking off that long bias and going back range bound. So thinking, well, probably start thinking short chart at that point, because if you think about how the bonds has been trading lately, they've been pretty good shot to the downside. This feels very much like a reaction to the news, and if they start reversing that and they start taking out that 113, I'll probably start go from leaning long to leaning short and see if they can run it lower, run it down here to test these lower support areas. So that's where we are. So starting off with a slight bias to the upside on the bonds. Let's see if they can take it higher. If not, I would be probably going to be in a spot where either we go stay range bound, or if that 113 comes out, we're going to be heading lower. All right, so that's the bonds. Back to the ES. And yeah, buy crazy action like this. So you just had to be, but I mean, if you look at the ES right here, they had at the 6680, 6680, we were up here. They run it right up here. The first one is just the extension to the upside, running the stops outside of that area. And retesting they were retesting this bar, but then they shot that thing up 76 to 80, so 4 points above it. Then you have the bounce bar here, so retest. So this retest did not work, the first one up there. So this little bounce here. If you try to get short on this guy, you had not much going for you, break-even trade. You would be at break-even and got stopped out on this bar. Then you run it higher, so now they ran stop sites out of this level. They're pretty hard at that. And then they stalled a little bit in attempt to retest, and they ran it lower. So I think there's two retests in here. Well, three retests in here, really, which the first one had a small trade in it. This guy did not work. They just ran it higher. And that's the reason why you don't want to step in front of it. I tend to do that, but it gives you better trade location. But I would get caught in that, you know. You could get in and the ES get caught when they did really run it higher like that. If you want more certainty, you wait for a setup like that to run it higher. You have a little stall that try to take it higher and then start failing. Then you have on the way down here when you start taking out that low. That's when you have a potential opportunity for sure. That gives you more certainty, but it's you have had to give up some trade location for a trade like that. But man, it's like it is pretty sloppy. So I've been opting to sit on the sidelines for a bit to see find really good opportunities. So I think that's the ticket. Trying to engage the back and forth here is probably a fool's errand. It's going to be very difficult to keep up on that. Not much follow through on anything. So Anyway, we'll wrap it there. So range bound trading to get started on the ES and the Nasdaq. Watch the levels if we know when to change our bias. And bond market, we start with a slight bias to the upside. Alrighty, guys, we'll wrap it there. So good trading, and I will see you back at 11:30 for the next update. Later.